Pursuant to Internal Revenue Service guidance, be advised that any federal tax advice contained in this program is not intended to be used, and it cannot be used by any person or entity for the purpose of avoiding any tax penalties that may be imposed by the Internal Revenue Service or any other U.S. federal taxing authority or agency, or promoting, marketing, or recommending to another party any transaction or matter addressed in this show. The opinions expressed by the host and the guests are their own and may not be used as authoritative advice. Any use of this material without the written consent of the host is strictly prohibited.
Welcome back. I am your host, Attorney Stephen Leahy, and this is the IRS Radio Hour on AM 560, The Answer. I hope the listeners are having as much fun as I am.
Me too. Steve, this is the section of the show where we take a listener's question, and this comes from Dr. Richard Fader of Fort Wayne, Indiana. Dr. Fader says, please finish last week's blog. No. The question is, what is the difference between different kinds of business structuring?
Okay, so this was a question I think is important.
Thank you, Dr. Fader.
Thank you, Dr. Fader. And again, I think it's the Dr. Fader Ask a Question segment.
I'm new at this.
I know. We'll get you. You'll get you. Just follow my lead, Jim.
Okay.
Everything will be fine.
I am.
Okay, so because a couple weeks ago we were talking.
I'm done talking.
Okay. I'm not talking now.
No, I'm not talking now.
Okay.
I'll finish talking.
So a couple weeks ago we were talking about the differences in the. Well, actually, I think we were talking about some people will say, those Koch brothers don't pay any taxes.
Oh, that's right. That's right.
And that's
and that was the sub S or S or whatever.
That's right. And so that's what we're going to talk about.
And you think I don't pay attention?
Different business entities. So when I go in business for myself, generally I start as a sole proprietor, right? So I just start selling things and I take the money, and any business that I produce is mine, and I'm taxed on it. So any source of income I'm supposed to pay income taxes on, and I report it. But there are other kinds of entities, and these usually people go into a corporation or what they call an LLC, and what they're trying to do initially is protect themselves, get protection from liability. So if something happens in my business, they don't come after my personal assets. So you start a corporation, and there are generally two types of corporations. There's a C Corp, and then there's the S Corporation. A C Corporation are the larger companies, but any company can be a C Corporation, a small company. One guy could be a C Corporation. But the difference is a C Corporation is a separate entity for tax purposes. So if I start a C Corporation, my business takes in income and it has expenses, and whatever's left is defined as the profit. And under a C Corporation, the C Corporation has to file an income tax return and pay tax on the profit. Now, the owner of the company can take dividends, or sometimes the IRS will come in and impute it as income if you're using that income for your personal expenses, like your mortgage, like your grocery bill, which most people are going to use their business for, right, to pay their personal expenses. Mm-hmm. If you're using it, then the IRS will come in and impute it as income to you too. So now I have to pay taxes, and I have to pay payroll taxes on that money also. So now it's taxed twice. So the C Corporation pays a tax on it, and then if I take that money, I, as the owner of the company, also pay a tax on that money. So if I own stocks in a big company, let's say I own stocks in GM, okay, maybe not the government.
No,
maybe
not Government Motors.
That's not a good one. But if I own a stock in any company and then they pay me dividends, then I pay tax on those dividends. And they've already paid money on the profit. They've already paid a tax on the profit. So it's double taxed. An S Corporation, you can elect to be an S Corporation. And an S Corporation changes the way you're taxed. Now it's going to be taxed like a partnership. And I left that kind of entity out. I should have mentioned a partnership. And what happens with the partnership is all of the owners are the profit flows right to them and their income. So the corporation doesn't pay taxes on any profit because technically there isn't any profit. Mm-hmm. If there's any money left, it's taxed to the owners of the company, and they're taxed accordingly. It's the very same thing in a partnership, as we just talked about, as I just mentioned, or what they call an LLC. An LLC stands for a limited liability company. And a limited liability company is a lot like a corporation. It has less restrictions, less regulations. So if I'm a corporation, I'm supposed to hold meetings and shareholder meetings, and if I don't follow these regulations, they may, what they call, pierce the corporate veil and come after me for the liability. Well,
so you have to have a board, and you have to have a chairman and treasurer and all that?
Well, I don't think if I'm a single company, then I can't have a board because I'm the only guy in the company. Mm-hmm. Okay, but an LLC is called a limited liability company. It's fairly new in Illinois. I mean, my kids will always say, is it new? Mine new or your new? Mine new might be 25 years ago. Their new is last week. Okay, so so it might have been some years ago, but it goes back. It doesn't go back like a corporation, which is hundreds of years, right? Mm-hmm. So a limited liability company protects the owners from liability, and they're taxed as a corporation. I mean, as a partnership, just like an S corp. Things like that. So that's the difference in how these different entities are taxed.
We'll write a blog on that one day, won't we?
Yeah, I think that's an interesting thing. I think people a lot of people don't understand why it should be an S corporation. And usually if you're a small company, you should probably be an S corporation. I help people with that too, but that's not the focus of my practice. I help people with financial problems.
With financial problems. But it is interesting that we get into these different... so if people have any questions, they can call who?
They can call me at 312- an open tax resolution at 312-664.
Aren't they the ones who sponsor this show?
That is the sponsor.
Oh, my God.
Now I have to let me give you the number again. It's 312-664-6649. Visit us on the web at chicagotaxteam.com.
Follow us on Facebook. Like us. We'll be right back.